Oh, I do remember that now, PJ. Yeah. During the finale sequence. Got it. Next up was TikTok stream. There we go. Remember all these. I wonder if you stock trade is fully out of business now or what? Site for a few months. Next time someone asks you if you're a god, say yes. Yeah, that's hilarious. No. Why? Then die. Thoughts on Lucid long term? You know I go off the charts, so what I'm seeing here is failure. It failed to retest previous all-time highs, and then failed to retest that, and it failed out. Failed this trend line, which broke down. Damn it! Did I miss that? Fuck. That was a bump and run reversal that I was supposed to be watching. And 1, 2, 3, 4, 5, 6 days ago, it broke that trend line. Price target $16 from 34. I can't believe I missed that. What a nice little bump and run reversal that would have been. Now you got to take it from 28 to 16. Still pretty good. I'll definitely be putting a short on Lucid today for my portfolio. And I need some more negative delta. All right. Well, let's take a look at this market. Good morning, Cesar Sanchez on YouTube. Can you explain rips in a bear market? Yeah, they're called pullbacks. Have you ever seen dips in a bull market? This is just the same thing upside down. You ever seen dips in a bull market? This is the same thing upside down. So the market's down off the Facebook outlook. Just spooked the whole market. And although Spotify also a little bit negative, but a bit more in line. And Qualcomm, same price it was yesterday, so fairly unfazed. So those were the big earners in pre-market and after hours. Also T-Mobile, and I think they did actually really well. They're up. But that, pretty much spooked the market. And then just now at, was it 9 o'clock? Yeah. There was some economic data released on jobless claims, and they were good. It was a positive report, but there must have been some other aspect of it that was not good because the market decided to drop on that as well. So the market's down, and that doesn't necessarily mean that it's going to be a down day for everybody out there. You can open down. You can open the market down compared to prices yesterday, and then the market can just move up all day. There's no relationship. There's no correlation between that. If the market opens down, that it's supposed to go down. It can really go either way for many reasons. Could be oversold and everybody wants to buy it up. There's many reasons. We've been noticing a pattern that either late day, midday, or late morning, if the market's been dipping, suddenly it just rips, breaks the high of the day, runs. It's like these FOMO rips. We don't know if it's a algorithm going on out there, but it's been new behavior for about 2 weeks now in the market and happening just about every day. So, be ready for that. Be quick to adapt and change to this market. If you see a double bottom or a bullish double bottom or divergence in the VIX, it's worth risking being wrong to try and buy that as potential bottom reversal. And then the reward is worth the risk of being wrong. Thoughts on gold or silver? I mean, gold is, the safe haven asset, the apocalypse currency. It's a good place to have some allocation, 5, 10, 20% of your portfolio right now with the way the global climate is, the way the global stage is with tensions. So, if anything remains strong in all this, it might be inflation and inflation stocks, XLF financials, and energy. So those two primarily are looking a little hot today. They're doing well, and rates are moving up. Rates are trending up. We've got 6 points to an uptrend in rates this morning already. So inflation in effect. We actually hit 1.85 on the 10-year, so we're getting pretty close to 2%. And that's good, but at the same time, inflation is the year over year of rates, mainly the 10-year, year over year on rates. And it was over 7% recently, so that's what spooked the markets about a couple weeks ago. So we got lots of market spooking going on, and it'll be interesting to see how the day goes today. In retracement terms, today could be horrific. It could be a really bloody red day. If we get below 351.5 on the Qs, which is only about 7 points away, so a 7-point drop on the Qs, that's going to lead us back into the territory we were in a week ago, last week. And that could happen. The daily range on the Qs is, anybody want to guess? Well, it's over here. $12. So to drop $7 is really easy. because the average is 12. So that means some days it drops 15 or goes up 15, and some days it goes down 10. You see what I'm saying? So the average is 12, and we only need a 7-point drop. So the Qs could really, the Qs are in a dangerous position this morning. The market is in a dangerous position, but mostly Qs leading the way down because most of the components in the Qs in our tech are growth stocks. And growth stocks are the ones getting hammered right now. Hammered by inflation, hammered by supply chain issues. They just can't get that growth kicked in this year. So they already had huge multiples because of the previous understanding of growth. But now you have to discount those back from the future, however far you were looking out. You know, like the goose that laid the golden egg, PE ratios are like the goose that laid the golden egg. You would never sell the goose for the price of one egg. If somebody wants to buy your goose, they'd need to buy it for the lifetime of the goose and how many eggs you think that's going to provide. And so, you had one estimate, right, on everything, on growth stocks. There's nice and rosy. We could look out, 20, 30, 40 years and figure out the total value with cash flow. And then you sort of discount it back with inflation rate all the way back to current day to try to figure out, okay, what's the current price based on this rosy outlook. And so you move all the way into the future, discount it all the way back, and you arrive at what current price should be, right? And so that's sort of like if you were to shoot a missile from the shore to an island, right? If you're 1 degree off, but you're trying to hit like a boat that's right there on the beach, you're going to nail it. But if you're 1 degree off, by the time it gets to the island, you're going to miss it by miles. It's going to be miles off. So when you're looking that far in the future and then discounting back to now, and there's even a slight change in rosy outlook, it's compounded so far into the future that when you discount it back, it creates a huge change. And that's what we see in Facebook. So they're saying, okay, the future of this stock, therefore, is now calculated like this. It's off by a couple of percent, but discount that back, for 30, 40, 50 years of projected outlook, and you have to make a huge shift, right? So I think that's going to change. I think, maybe even next earnings or next year, Facebook will have a new rosy outlook, and it's going to discount back much higher. So I think this is a great time to average down into Facebook in your long-term portfolio. Facebook, Microsoft, Apple, these are some of the companies that should be forever holds that you never sell for your not just for your retirement, but that you pass down to your kids. This is like 100 plus your whole life, your full life. I call them forever holds because you would never sell it and realize a tax gain. So you can do what the rich do, which is get loan. You can write checks against the gains one day when you need some of the money, but you never sell. And that is only what you will do with forever hold type of stocks. We don't diamond hand GME and bullshit like that here. But as far as forever hold stocks, yes, good idea. Anywho, yeah, 20-for-1 split. Is that the most in history of splits for Google? No, and I don't think so. No. We have splits like that all the time, especially on really shitty stocks. We have reverse splits of 100 to 1, 1,000 to 1 reverse splits. But in any event, it's a good thing. And I think, until the split happens, it's going to give Google a lot of energy, and people are going to be buying in for that split. It's the thing. It happens. I don't know if they're dumb or what. They think that the split's going to change their price, or that they're smart and they know that things run up to splits because people are dumb. It's like catch-22 paradox, like Back to the Future. I don't know whether or not people are so dumb that they buy for the splits thinking it's going to have some future greater value, so they buy in, or if they're so dumb or smart that they're dumb or smart that they do that because they know that people are so dumb that they buy in and it causes the price to go up. So it's a paradox. It's a trap. It's a paradoxical trap. And splits like that do cause a run all the way up to the event in those stocks. Make sure you sell the day before the split at the close of market, because once that split happens, there'll be a big drop, a sell-off. That's the play. The split run-up. Events run-up. Buy in after the split. Okay, well, you buy now, right? Let it run up. Sell the end of day before the split. And then, no, don't buy in after the split. After the split, you're going to have to let everyone settle out. That could take a month or two or a few weeks. Figure out a bottom. Make sure it's still bullish on it. Do your TA, do your technical analysis, and then get in. No. To buy into something, you have to have a reason you're buying in. And buying after the split, what's the reason? All right, we've got Josh. Yeah, earnings straddles are negative EV. They do not make money. So that's been proven time and time again. I've tried to disprove it throughout my history in the markets, and nope, everyone was right. You can't make money trading earnings at all, ever. You can't do it. There's a couple ways you can, but not the earnings. The first, most primary way is to sell the options instead of buying them, so that you're the house, you're the casino, so that the people who are buying them, who will lose in the long run, you're the one making that money. You can sell options. Another idea is you can catch the run up for about 2 weeks before. Certain stocks will run up right up to their earnings because people want to buy. Some people don't have the ability to buy options, but they have a bull. They expect maybe it's going to have an earnings beat. And so how they play it is they buy stocks. So some stocks run up for about 2 weeks, but then people start already taking their profits, depending how smart they are. The smarter money gets out earlier. They start taking their profits right up before the earnings, and then they're all out before the earnings report. So that's one way to play them. And then after the earnings, if the earnings are good, you can get in and the stock will go up for the next 3 months, So, but what you don't want to do is be in for the earnings difference, because that's a complete gamble. It's too unknown. You have about a 25% chance of being right, and there's a 10% chance of that. But no, it's really bad. Everywhere I go, something reminds me of her. Does anybody know what that's from? All right. We've got 2 minutes and 40 seconds to the open. We're watching BON for momentum trading stock and also BCDA. I am now going to put those onto my high-speed radar. High-speed setup, I mean, so that we can really, really watch them. And we also might think about dip buy if it potentially happens on, what was it that's bullish today? T-Mobile. Wow, T-Mobile up $1.50 right before the open right now. But yeah, in general, we got to be watching this market, being careful. Looks like Apple's coming up for breakout, helping the cues a little bit right before the open. We've got 1 minute and 45 seconds before the open. 1 minute and 15 seconds to the open. And by the way, if Facebook continues to drop, who knows where the bottom will be. So there's a potential trade there, shorting puts for the day trade. Well, Amazon's dropping because the whole market's dropping, and also, yes, probably people fear the same potential, and would rather not risk it for the reward. Makes sense. I don't know, Mr. M, about Twitter, but I'm already in some Twitter calls for the earnings that are coming up. And yeah, there's probably a lot of things that are worthwhile getting on these dips, and especially things that are really beaten down growth stocks that you think are companies that are going nowhere, that'll be here in 10 or 20 or 30 years, with absolute certainty. All right, 6, 5, 4, 3, 2, 1. If Apple breaks out of 175, you can get in for $1 of risk to long. Right, T-Mobile TMUS hit 120 just now. We'll probably be looking for a dip buy on that in a little bit. The Q's dropping, the Dow moving up. SPY meeting it in the middle. All right, big candle coming up on BCDA. If BCDA can break, we would want to actually wait for it to go. Okay, that was Apple breakout. There was your Apple breakout, $1 of risk for entry on Apple. If BCDA can break 223, that's what we're looking for. And it would be about 30 cents of risk. T-Mobile now at 121.60. T-Mobile just running. I don't think we're going to get that dip, but if we do, it's not right now. It's going to come in a little bit. The industrials now pulling back while the Qs rally a little bit. Tesla rallying pretty strong. There's the breakout on Tesla to the upside. About $13 of risk if you want to get into Tesla to the upside. Stop at 878. But ideally you want to wait a 3 or a 4 or a 5 minute opening range window before you make your final decision on direction. The VIX on the Qs just popped up a whole point. So the fear index on the Qs pretty strong. Looks like Facebook's getting bought up here. T-Mobile now at 122.50, pulling back now. It's quite volatile today, T-Mobile. TMUS. Bond is failing out. BSDA, BCDA, just hanging in there. Apple broke to the upside, but having a hard time following through. Tesla is following through. Amazon's coming up. Seems to be a bit of buying the dip going on in growth on these growth stocks. The feeling is this is an overreaction. It looks like, and people want to buy up the worst of it. Looks like everyone is buying this dip in the market, but in growth. Value is going down growth is going up this morning. Oil is trying to get back up. Oil's going up. Energy probably will follow. Oil is going up to the close of yesterday's market. So oil staying firm. How many of you guys on Zoom, watching this on Zoom, are on a desktop versus how many of you are watching this Zoom on phone? How many of you are desktop versus how many are mobile? It's quite. I think I'm gonna have to launch a poll here because there's a few answers. I'm not sure I can just add it up on the. All right, I'm gonna launch a poll somehow. Let's see. How do we do a poll? Chat polls. There we go. Edit this poll. Dip buy on T mobile? No, not yet. It'll be the 5-minute candle breakout for that, so we have a much stronger trend. We're getting some other breakouts to the upside. Facebook is continuing to drop. Did anybody get Facebook puts at this point? Boy, did anybody get Facebook puts going into that earnings? That would have been our typical lotto play. Facebook, and we would have hit it. That's good, Christina. But the market's, well, just let it follow Facebook, I guess. Watch Facebook and the cues to get a little bit of a sense of what you're up against on the snap pricing. Now, I wanted to change the polls. There it is. Locate that poll. Edit it. All right, here comes. That's so ridiculous how difficult it is to create those stupid polls. That should be so easy. It's going to ask you, and let's see, because I have a reason I'm asking, obviously. Here comes the poll. The poll has been launched. If you can't see it on your phone or whatever, it's been launched. See if you can click in there and and vote for mobile if you're on a phone. Desktop looks like everybody's got figured out there. Anyone who says they bought Facebook puts prior ER to ER will have to show proof. Yeah. You had a Facebook call, and to hedge, you got snapped. Oh, very cool. Because it was already in downtrend, was cheaper, and I know that it falls. That was some really smart work there, Christina. I like that. So in other words, you took a bet on something, and then to hedge that, you went with something that would move sympathetically in the opposite direction should you be wrong, that was already in bearish trend. I mean, come on, guys. That was really smart. Good job. Yeah, maybe it's lower risk. Why? Because it's not reporting earnings? Guess so, yeah. So then did you go bigger on your hedge than necessary that you could compensate? Like how Min builds skyscrapers? Wow, it's a dead heat so far. We've got 24-24, 50-50 dead heat on the poll. Still going. You're able to change your answer if you want. So at this point, we've had 48 responses, and there's 77 of you in here at the moment. So we need to do a poll about like which people are physically disabled from pressing a button on polls and answering polls, or they're mentally handicapped psychologically such that they just can't get themselves to push a fucking button. Apparently 30% of you are. Come on, you guys, get off your asses and answer the question. All right, Apple, broke, almost broke even, slight profit. That's awesome, though, isn't it, Christina? I mean, your hedge worked. You were wrong, and so altogether, kind of worked. And depending on the direction of the day, you should path of victory both of them. Well, not the call. The call's gone forever, but you could probably path of victory Snap. I'll pull up Snap here. Only poll I see is a brass one. I thought you were going to make a joke about Poland. Yeah, the call is done. That's worth the 3 cents now. And by the way, don't ever close an option that's gone worthless to the point where it's effectively useless for you to recoup whatever that money is. So for different people, that could be a different amount: $50, $5, $10, $3, $7, $25. Just leave it, because I've seen it time and time again. 1 out of 10 times, by the time that expiration hits, some random news happens, and the stock goes through the roof, or goes in your direction. I've seen it time and time again. I've had that happen to me probably 5 or 6 times in my favor, and it pays for those other times where you lost. So there's a lot of value in not closing that and just allowing it to be worthless. Don't try to get your couple bucks back. It's still a lotto at that point. Yeah, Qualcomm's going up a little bit. It bounds on Qualcomm here. 205. And where's Qualcomm at right now? At 191. Keep an eye on that. And Spotify. Where did Penn go? Okay, there it is. What did I say this morning? Oh, Lucid. Let's get in on Lucid. All right, so I'm ending the poll. The results are if you need to answer the poll number thing here, we've got 59 responses out of 78. So let's see how many people are incapable human beings. 59 divided by 77 is 76% of you responded. So 23% of you we should ridicule. Okay, there we go. We got another vote in. I guess somebody said that. Oh, there's a poll. But anyway, it is too close. It's 56% mobile, 44% desktop. The reason I say is next week I might be going to a vertical format. That's going to be so ugly. No, I'm not going to do it. Based on these results, I'm not going to do it. So don't worry about it. But there you go. Share results. What does that mean? Okay. I'm sharing the results, I guess, now. Are you guys able to see it or something? I don't know. What's vertical? What's up? Oh, vertical format. Like, instead of sideways, the way we have it here, the screen would be vertical. Well, you bet most people on their phones are just watching, where most people on desktop are actively trading. I mean, you would think so. I mean, I use my phone as for your moment-to-moment needs. Yeah, and you use your computer. Yeah, exactly. That was the way I couldn't think of the word, but yeah, multitasking. I'm multitasking on the computer too, but I guess you're doing your main thing on your computer. Your Zoom glitches on your PC. Yeah. Yeah, I don't think T-Mobile's necessarily going to provide. Industrials are really crapping out hard, and that's possibly causing the Qs to retrace pretty hard as well. And they're now about 80% retraced. Not good on that bullish rally that just happened. 80% retracement is not good. So it's either an indication that today's going to be sideways whiplash, or if you take any cues from from the industrials, the market's just going to be dropping today. Like I said, this could really be a bloodbath today. The cues are pretty close, only 7 points away from hitting a key level that would just drop us right into the blood zone of last week. Have you seen this commercial for Geico with the the robot? I love it. I don't like a lot of those Geico commercials. I think they're ridiculous. All those insurance companies commercials compete for meaningless, stupid comedy. It makes no sense. They're not even funny. They don't compute, but a couple of them do. Anyway, that one was a robot is logging into the computer or something, and it's doing the thing where it asks you to find like how many bicycles pictures there are, to authenticate. And the robot says, like how many bicycles are there? And he goes, "Oh, come on," because he can't get in because he's a robot. It's really funny. He just wants to use computer. I find it funny. Yeah, you know what? Yesterday, the rain was really bad, and the window really frost. I guess it doesn't matter too much, but fogged up. Really hard to drive yesterday, and it made me think, what's the Apple car going to do in that situation? Because I mean, the conditions were atrocious, um, but not even that bad, really, and how bad things could get. So if Apple has a car without a steering wheel, what do you do then? What if there's an emergency when road conditions are such that you could drive, but the car couldn't? You know? Yeah, I think that's not going to happen on the Apple car there. Yeah. You're up 87% on PayPal put. Nice. Johnny, was that from the open or from yesterday or what's up? From yesterday? Very nice, very nice. Watch it though. It could bottom at any time, and this market is being very strange. We've got bearish divergence on the cues already, like strong. So you might not want to be fooled by this little pullback right now, unless something changes on this bearish divergence. No real trade to speak of on BCDA or bond. Google staying strong at about 29.50, showing strength. Same thing with Tesla. Google and Tesla acting some of the strongest on the market, most resilient. There's some of that from Apple, but right now, even intraday, I would say that those two are stronger than Apple, Google and Tesla. Yeah, so I wanted to get that Lucid put. Yeah, it's a good time to get it. Lucid's up a little bit. I want that negative delta. So, it can take up to 2 months for those. So I will be grabbing roughly the 18th of March puts. One put. And if you guys can see my little Lucid chart here in the middle, this is my own method. A lot of people like it. This is how I chart out the profitability line of an option that I buy. Take the moment you buy it, project out to the break even price at expiration. Look that up. Different options will have a different break even price. Out of the monies will be terrible. At the monies will be medium, and in the monies almost flat. break even. And so on this one, I'm going to test out here. I'm thinking of getting the at the money, slightly in the money. 435 from 28, so 24, so 2350, 2350 is the line to beat by expiration. Draw that on your chart, and I can say March 18th to 28 is that line. There it is on my chart. I have my options break-even line. So now I can examine that and kind of say, hey, is that going to be okay? Do I something a little bit flatter to pay more to get it flatter? Or can I get away with paying less? Go more out of the money. So I think, no, that's perfect. So the at the money, slightly in the money, 28 put, March 18 seems to be a way to play lucid short. Bump and run reversal. All right, I'm going to take these momentum opportunities off of my high-speed setup here. And T-Mobile didn't really ever put in the right dip for us to buy a dip. Maybe it will. That's money saved there because could have gone sideways all day. And there goes the Qs. They are actually turning around to the downside a bit. And the industrials really failing out. And SPY making a new low right now. Overall, you want to be in puts on a day like this so far. Till that changes. We're 26 minutes off the open. Facebook has been bought up from the 237 level. I don't know if that's what you thought it might bounce, Chris, if you were looking at the charts. 237. Okay. Facebook touching VWAP retest low right now? Oh, right. Uh-huh. So is it going to be bullish or bearish? We have to see. PayPal is definitely sliding to the downside now. Getting more hurt. I mean, there was no reason not to be in PayPal short for a long time. I imagine a lot of people just, made a lot more money on that drop the other day. But, the ultimate goal on PayPal's retracement here is 120, is where it's at. 120. That's got to be the ultimate goal, except now the news was so bad, it's like, wow, maybe we can get down under 100. What's PayPal worth without eBay? Not much. Oh, isn't that cool? Yeah. And it's so pretty. Yeah. The VIX on Qs still bearish. However, the Qs are acting like they're finding some support. So at this point, what's everybody in? What are you guys in? And for which direction? Facebook, Apple, Tesla calls. I like it. And you need to get into some equal things that are equally bearish as well. I don't mean things that are down today or are going to have a down day and they're great stocks that are going up. That's not what you want. But you also, Dondrell, want to have some balance of things that have been going down. So in case the market turns around on you, and those positions, Facebook, Apple, Tesla, suffer, you'll have the activation of your downside puts. Getting VIX puts here, Preston. All right. Well, I guess you have it. Is what you're saying. Yeah. MTech movement on MTech. Oh, BCDA is starting to curl up. If BCDA can break 220 even, I would think that could be a trade. 220 breakout on BCDA for 25 cents of risk stop at 195. BCDA. Better keep an eye on it here. It's building up some momentum. I know, right? What are you guys in? What are you guys in today? There's a lot of opportunity here. You don't have to just do what I recommend. Well, I already said, get some puts. Have any of you started to use, the 5-minute opening range breakout a little bit more than before? There's the breakout on BCDA. BCDA for momentum entry has just happened. The 220 breakout just happened for 25 cents of risk. Okay, the lucid puts. Yep. And there, just got into the BCDA. Good. All right. So now on BCDA, you want to be taking 5 to 20% exits profit on your position. So like 5 to 20% of your position. Every 10 cent of gain level from there. Every 10 cent price level from there. So the next one will be 230. Wait a minute, or is it 5 cents? No, it's 10 cents. So right now your stop is going to be $1.95 if you calculated your risk properly, 25 cents of risk share. Oh, sorry, I was looking away. Yep, first profit target on BCDA just hit. Get out 5 to 20%, everybody. BCDA. 5 to 20%, you've just made your profits. Once you've taken your first profit target, you want to move 50% of your rest of your position to stop loss of break even. Next profit target is what for everybody paying attention? At what level? Right. Yeah, just below 240. 239. Perfect, Preston. So for $1 to $3, it's every 5 cents, and then for $3 to $5, every 10 cents. Just was feeling 10 cents on this one. But you can go ahead and do it every 5 cents if you need to. Thank you for. I didn't have my tiering next to me. I know that 10 to 20 is 50 cents, and that 5 to 10 is 25 cents. Ah, your brother. I already forgot. Dundrell, is that your brother? Your brother's name is Dave? I double check this. Yep. You paying attention, Dave? Yep, David Austin. Trucking all day says Peloton is doomed. Supakapa wants me to check Alcoa. I mean, just as a trade, difficult swing trade, but as a kind of medium term investment, yeah, that's an inflation stock. Aluminum. How much higher can it go? It can go. Inflation's still happening. As you can see, since the pandemic low of $5, $6 roughly, it is now at $61. So that's 1,000% gain since the pandemic low. What happens after an economic collapse is you enter a period of stagflation where it's not reflating yet, and then reflation starts happening. That can happen really quick. It can take a long time to start reflating. Hard to say. So anyway, when the economy collapses, you want to buy up reflation stocks like Alcoa, which is aluminum, And you want to get financials because during reflation, they're going to do well. You want to get energy. You want to get all those set up. And then if retail got hit super hard, you want to get retail. You want to get growth if growth got hit really hard. Those are the kinds of things you want to buy up at the bottom. Not necessarily value. Value is what you would have kept during a crash. Of course, you don't really want to keep anything if you can avoid it, except anything that might go up. But yeah, that's what for future reference on the next crash, make sure at the bottom you buy up reflationary stocks, growth stocks, retail if retail got closed down, you know, economic collapse like that. Yeah. He must be sleeping in class right now. Oy. Tesla keeps going. Tesla probably the strongest performer on my screen right now. But Facebook has gone from 237 to 247, so Facebook's up 10 points off that bottom of 237. So that's roughly about 4% off the bottom. Yeah. And SPY and the Qs generally going sideways now. Dow may have found a bottom, the industrials, but it may not. It may still be in a bearish trend. Dow drops further, that's going to weigh negatively on the Qs and SPY, but currently the Qs and SPY are trying to hang out in a sideways trend. Tell you what, though, I don't trust this market as far as I can throw it. And that's why the VIX is still elevated above 20. This market is dog water. I wouldn't, feed this market. I wouldn't even feed this market to a dog. This market's worse than dog water right now. And it's what makes it bad is that it's so unreliable, right? Isn't that what you would say? It's so damn unreliable. And that's exactly it. That's like such a good lesson to learn about what it means when the VIX goes up. It doesn't necessarily mean that the market's going down. When volatility happens and the market crashes, the market goes down, yeah, it goes down overall, but it's excruciatingly painful because the increase in volatility also creates whips. Like it goes back and forth. The uncertainty is really what's going up. So the VIX is the uncertainty index. and it becomes even hard to make downward trades. Just direction is just so turbulent. And so the VIX really measures uncertainty, not like that we're going down. It's uncertainty. And so, it's harder to make money when, as a day trader for sure, when the VIX goes way up like this. And it's hard to make money as a swing trader when the VIX is like this, which you kind of just got to like have medium to macro plays work best in these situations. Just the economy is just out of whack. Nvidia just broke high of the day. Nvidia being strong like Tesla, and so did Apple. Apple just broke high of the day. So we're starting to see some strength now off the bottom. Facebook has been pulling back through that. So I don't know if Facebook's going to keep going or not. But it certainly has bounced off the bottom. Oh, Dusty says AMD also. Oh, and then trucking all day. I'll take a look at Peloton in a second here. Yeah, I can't do anything with that AMD candle. It's nothing new. Heading right into retracement area. Peloton looks like it's going to break new lows in a couple days, maybe by the end of the week. Possible. Might be a good time to get puts on Peloton. Has done nothing but follow the... Man, I should call that ribbon the path of victory, huh? But it's not really. The ribbon of victory. How about that? Anyway, for now, it's called Trend Guard. One second. Oh, let me see. It is snowing. We've got snow in central Texas. Tesla looked like a really good play for you today there, Dondrell. Girl kills it on Tesla every day. Whack is breaking out. Let's see if it matters. No, matters very little. I am curious if DWAC can break 84.50. It's getting close. Let me know about that, okay, Gary? 84.50 if you're stalking the whack. That's the price to break because that might send it up to test the 90s. That could be good. Dwack is definitely having a good day. Let's see if we can break 84.50. Failed retest on BCDA. Yeah. I mean, once you notice that, you can take out 50% of your position at any good price. Preston, that's a good time for that. Just de-risk, just slice it off. And if you're wrong, it rallies again, have an order to fill back up if it re-breaks the highs of the day, 231. So you're playing both sides, right and wrong. All right, guys, I'm going to end the stream right here. I'm going to go get some shoes on. I'm going to go out there with my kids and play in the snow. It's cold. But so I'll see you in the group in just a few minutes. Everybody out there, if you'd like to check out our trading group, just click the link in my bio or the link wherever you are at, and we'll see you in the group. See you soon. Guess we're going to go make a snowman or something. Stay hedged, my friends. Stay hedged. Christina, good job. The Qs just broke pivot. So this is really good. And SPY moving up strong. The Dow with a reversal, a bottom reversal on the intraday chart. But we're going up for a little bit here. We are in an uptrend short-term intraday on the Qs now. Play accordingly.